Good afternoon, everyone, for joining in. Thank you to all our guests today for joining our webinar with the DIFC, Khaitan, on exploring MEASA region opportunities through the DIFC's lens. We hope you enjoyed today's webinar and find the content insightful. Please note that the webinar is being recorded and will be distributed. If you have any questions for our guest speakers today, please type them in the chat box option provided. Without further ado, I would like to introduce our first speaker of today, Ali Hassan, Senior Representative of Europe and North America from the DIFC Authority. Please, Ali, thank you so much.
Thank you, Mariam. I'm delighted to be here today representing Dubai International Financial Centre at this webinar brought to you jointly with Khaitan. And my thanks to Khaitan and our fellow panelists, Signzy and DFSA, and indeed all of you that have taken the time to join. Just by way of background, I lead international coverage for DIFC. I've been involved with the Centre for 16 of its 17-year history. And in essence, I assist international corporates, financial firms, and families to make the most of the DIFC platform, to engage clients, access business and finance opportunities across the region. As well as finance and wealth, and reflecting, I guess, Dubai's position as an entrepreneurial hub, we've seen tremendous growth in technology and technology companies coming into Dubai, the DIFC and the UAE over the last 2 years as tech meets finance and other aspects of the economy in more and more ways. And our future of finance strategy really kind of future-proofs us as we try to optimize, what we offer and the support we offer as we play our role in the shift to a digital economy, which we're seeing across different countries and regions. So before we turn, we've got a fantastic panel for you. And before we turn to the specific regulatory aspects of overseas expansion with a view on UAE, Dubai and DIFC, I'd like to set the scene and really cover, briefly the market opportunity we see in the MEASA region, Middle East, Africa, South Asia, the trends that we've seen in market development thus far, and the key aspects of the DIFC ecosystem which are available to you and your clients. Can I have my slides up, please? So we moved on. So just turning to that market opportunity, we see it's certainly real, and I think that just to summarize, the key drivers. I think first of all, you have the diversifying and growth economies of the region. Certainly, the GCC is accelerating its diversification from hydrocarbons. Dubai itself never really had GDP coming out of the ground, so it's been diversifying for decades. But the whole block is now moving very fast in that direction, and that's throwing up various opportunities. You also have the growth markets, of course, India, very close proximity and connections with India. The demographics are very supportive as well. 40% of the population under the age of 25. And if you turn to financial services, we've seen significant growth over the last decade or so in financial services. What you're seeing, of course, the hydrocarbons has created quite a lot of wealth, certainly in the sovereign wealth fund aspect, but increasingly the private wealth, which is actually of the same type of quantum, around $3 trillion, is coming into play as that wealth is becoming more sophisticated. More capital is being deployed into the financial services products and different segments. So, and in terms of the digital adoption, we're seeing that fast forward, 28% CAGR growth in terms of e-commerce, very high smartphone penetration, much higher than other areas of the world, developed areas of the world. And I think, For example, Google looks at smartphone penetration when it looks at which markets it should enter. So it's very high in the GCC, and we see generally the landscape in terms of competition being relatively benign, but certainly the demand being relatively high. And then if you think about the MEASA opportunity, and you think that that's something that is attractive, then you would think about where is a good landing point and a good location. And I think that Dubai over the decades has certainly built on its heritage actually as a commercial hub that links Asia, the Middle East, Europe, and the Americas. It is clearly a global commercial hub, significant trade flows flowing through the centre, and Dubai has certainly worked very hard to put in place the hard and soft infrastructure to facilitate business, to attract capital and talent, and that's been going on for a good period of time, and obviously is set to continue. And the Dubai government is very supportive, not only of what's happening in the financial centre, but more widely with the economy, and also this push towards the digital economy. So it's looking at initiatives right across the city, has adopted a smart city approach, and is bringing innovation to bear across the various economic sectors, not just financial services, but in transportation, aviation, logistics, tourism, manufacturing. And just a snapshot on that sort of wealth landscape. I kind of mentioned that the wealth is accumulated, within the region through the various aspects that I mentioned. That is, local wealth, it's expatriate wealth. One of the trends we're seeing is entrepreneurs from around the world, in fact, relocating themselves into this environment and looking to engage the business opportunities that are arising. I mean, certainly Dubai has a very high concentration of billionaires drawn from around the world, including India. And of course, that wealth needs to be deployed, needs to be transacted, needs to be managed, and that is generating opportunities. So turning to the DIFC itself, so we all have a good understanding of what the financial centre is. It's a physical area in Dubai, 110 acres. It is a carve out from the UAE's civil and commercial laws. We have our own common law legal system with our own courts, and of course we have the regulator, the DFSA, that operates to international standards. Created in 2004, it's now the largest financial centre in the region. 28,000 people, 3,000 plus companies, around 700 regulated entities, 140 nationalities. So it's a very international place. So it's an unprecedented innovation in of itself. Back in 2004, with the adoption of international standards of laws and regulation. And I think the key, secret ingredient, the secret sauce that's really worked is that the cool thing about adopting international standards is that other businesses or businesses in other regions can easily bring business models and control environments and control frameworks and drop them in to the DIFC and have that access to the market opportunities that we're seeing. And of course, that's been combined with business-friendly aspects around 100% ownership, competitive taxation rates, and employment flexibility. There are other centres in the region. The DIFC has actually been, I think, an agent for change and has, promoted international standards, and we've seen others respond to that. But the other centres in the region tend to be a little bit more smaller and a little bit more domesticated. DIFC, or domestic focused. DIFC is the largest by far and the most international. And of course, with the centre, you get this clustering effect, right? So you know, an example of you know, you know, what you're seeing is not just the financial services that's being clustered in Dubai, but also corporate. So 70% of Fortune 500 companies have their regional headquarters in Dubai. So what the DIFC is trying to do is solve for that market capital and talent access. We continue to develop our laws and regulations, you know, again, accommodating different and new business models. So we have the data privacy laws, we have the IP laws in place with current standards. Yeah, and this, you know, this clustering effect, so DIFC, you know, tries to bring the market to you. This is an example of the banks that are based in the centre. You can see some Indian bank logos there, as well as other international players. So it's a great mix, a ready-made cluster for corporates, firms, and families to engage, you know, for financing, advisory, and transactional expertise in one location. Similarly, on asset management, you have a very deep community, obviously drawn to those asset pools that we mentioned previously, and it's the full range: global asset managers, alternative managers, and the private banking platforms. In fact, over $100 billion is managed from the DIFC by local asset managers, by family offices, and it's you know, well-established asset raising hub, but is increasingly becoming an asset managing hub as well. And in fact, we have over 100 funds that are domiciled in the centre too. And just to reiterate there, you know, approximately $500 billion has been raised by firms through the DIFC, engaging investors in the region. We also have obviously an established private wealth cluster. So as well as the asset managers and the funds that I mentioned, we have those family offices that are established, utilising DIFC structures, engaging that wider community. And indeed, over the last 18 months or so, having introduced a new foundations regime, we've seen you know, a very significant pickup and growth in that area. Now, just turning to innovation, to give you a flavour of the innovation community that we've established, you know, in 3 short years, I think over 450 now tech companies in the centre. It's 60% of all GCC. It's 6 times larger than any cluster, other cluster in the GCC. And you can see the range. You have the full range of the fintech verticals, but also other, you know, other technologies that are relevant to developing the ecosystem. So software as a solution. You also have health tech, HR, marketing, analytics, you know, coming through. And you know, we very much see, you know, regulation as an enabler that brings transparency and safeguards to market participants. And so we've had a new payments regime put in place last year. We recently put in place an investment token regime and a tailored regime for VC firms. To give you a flavour of who's come, you know, in terms of the tech companies that are in the DIFC, I mean, it is a great mix of, you know, unicorns, companies that are accelerating, and startups. And you know, it is a source, or it is a location from which you can raise monies. And in fact, the tech companies from the DIFC have raised approximately $300 million from regional and international investors. And the DIFC Innovation Hub is our focal point for tech companies that are coming. It's integral to the DIFC. It's embedded in that wider community, and it's trying to give you and support you in getting ready access to potential clients and sources of public and private capital, and indeed talent. We have a talent week actually happening in the DIFC in the next week or so. And there are a number of different, you know, market entry points, low risk options, low cost, and a full suite of supporting programs, so accelerator program, startup program. We have an incentivized innovation license that is available as well. So just kind of wrapping up, I mean, you know, DIFC's future finance strategy, I'll just leave this really there as a thought. This is what we see, you know, driving the future of finance, and everything that we put in place is around bringing, you know, day one revenue closer for technology companies. So it's, you know, it's an ideal platform. We're looking to develop that further. We're going to adopt a venture building type of approach across different themes, where we really support the firms that are operating in those different areas to facilitate their growth and, you know, develop the market further. So that's it from me in terms of, you know, setting the scene. I'd very much like now to broaden and widen the conversation by bringing in my fellow panelists. And to start off with, I will just ask them to briefly introduce themselves. So if I can ask Moin first to say a few words. We can't hear you, Moin. I think you're on mute.
Hi everyone. Thank you, Ali, for this for setting the scene. So I'm actually a corporate M&A and regulatory partner at Khaitan Co in the Mumbai office. We're a law firm with offices across India and in Singapore. And as part of my practice, I've spent over 14 years working on complex regulatory issues and matters to facilitate inbound and outbound transactions, and also get specific waivers and approvals for the clients for unique structures in India and outside of India. You know, today we will discuss a few areas of how the regulatory regime needs to be navigated while you are exploring setting up your presence in the DIFC, and I look forward to the discussion, really. Thank you.
Thank you, Moin. If I can ask, I'm just going across the screen. Arpit, would you like to say a few words of introduction?
Hi, this is Arpit. I'm founder for Signzy. We are a 6-year-old company. We help financial institutions automate their customer flows, including onboarding and KYC. We have been engaging with DIFC. I think I really liked the entire presentation that Ali did, and you know, I can also vouch for that it is actually true. It offers almost a plug and play mode of operating from Dubai, especially someone early looking for a quick way to set up in Dubai. I mean, we started with DIFC, and I think we have been engaged with them and super impressed with the kind of execution that is there, and the speed of execution which is there for a lot of approvals. So kudos to you guys, Ali, and thank you for having us here on the panel.
Pleasure, Arpit. And yeah, last but not least at all, Ken from the DFSA.
Thanks, Ali. I'm Ken Coghill. I'm the Director and Head of Innovation and Technology Risk Supervision at the Dubai Financial Services Authority. So we're the independent financial services regulator for the DIFC. I've been with the DFSA for approaching 10 years now. Originally joined under Ali. And so I have the pleasure of overseeing our innovation testing license program. That's our version of a regulatory sandbox. I also oversee the supervision of any innovative technology-enabled financial service, and that includes payment service providers, crowdfunding platforms, automated wealth management, distributed ledger-based product offerings, and also oversee our cyber risk supervision program.
Very good. Thank you very much, fellow panelists. So let me turn to our sort of first area of focus, which is generally about setting up internationally, you know, coming out of India. So the first question for Moin, really, I mean, what are the legal considerations to be kept in mind, you know, whilst setting up a business overseas? Would you say what are the key considerations there?
So in India, the foreign exchange regulator, the Reserve Bank of India, has laid down a set of regulations that one needs to be, you know, compliant with while you're setting up a structure or a business overseas. A key aspect is that you have to be setting up a business or a bona fide business abroad, so it could be an extension of your Indian business, you may want to expand into another jurisdiction. There are a few conditions that one needs to keep in mind just to ensure that, you know, when you're remitting the money, you're in compliance. And those are limits. So there's a limit of up to 400% on the net worth, or that is your capital and your reserves that you have in India. You would also be required to confirm that you don't have any investigation or any sort of, you know, regulatory action pending against you. Plus, there is one thing that I want to highlight is that while you're allowed to invest and set up an entity both by infusing equity and debt, it is very important that you first make an equity investment followed by a debt investment. Once you have prepared all these, you know, sort of looked at your limits, agreed on a business plan, you approach your banks in India, which are authorized banks delegated with authority from the Reserve Bank of India, which is the central bank and the regulator. And you submit these documents, get a unique number, and you can then do future transactions, infusions, etc. And your business can continue to operate abroad. Specifically, one thing that we need to be clear is that you're allowed to set up only a genuine bona fide business and not a holding company, except that you're allowed one level of a special purpose vehicle or one level of a holding company, but thereafter you need to have an operating business and an operating company outside. So I think that's a very, very brief summary. Obviously, the regulations are detailed, but happy to take up questions as we move forward.
Thank you very much, Moin. Arpit, if I can turn to you, Signzy has offices in New York, Mumbai, and indeed Dubai DIFC. I mean, what, as a business, what factors do you consider when you look at international expansion?
Yeah, no, I think so. Few things that at least I can talk about myself. What we looked at is, one is the ease of starting a business or operating a business in a particular geography. So that is very important, because on a day-to-day basis, one is of course the cost, and the other is the hassle of running a business apart from your actual business operation, your actual business needs. So why we looked at, for example, Dubai in MENA for us to start was because it allows you the ease of operating a business, both from setup and even ongoing basis. You have great institutions like DIFC who make that running of a business much more smooth. The second aspect from we are a technology business, so which means that we don't really need to be opening, for example, a coffee outlet to enter a geography. We are pretty much remote. We are digital. So, for example, if I need to target Middle East as a region, I can do that from a single location and travel on need basis. And therefore, you look at a geography where you would find it easier to scale. And what I mean by scaling is hiring talent, retaining talent. So one of the challenges which is not, which does not come out easily, is that while there may be a lot of geographies which are easy, making regulation easier is also, maybe some of the regulators do it, but I think what Dubai offered is retaining talent. So people from India actually move to Dubai, and they would not do that. I don't want to name geographies, but they might not want to do that for so many geographies. So that also helps or makes it easier for us to scale in Dubai, because a lot of my talent which is there can move to Dubai, and I get even hire talent from outside of India and get them to move to Dubai, which is also an aspect which gets overshadowed by all this regulatory arbitrage. But just the providing a favorable option for your people also to live, and not just your business, is also one of the factors that you take into mind. And the third is of course the business aspect. Is there enough availability of business? Is there enough growth, enough energy, enough events, enough conferences, etc., for your business to engage? And that can be different for, of course, different businesses. A retail presence business may have a completely different outlook. We are a pure technology business, so we have a different outlook. So that becomes one of the factors. That is that geography well known for providing, let's say, technology service, or well known for gaming, or well known for crypto, whatever that is. So these three aspects generally are what we take into account when choosing the location for our regional expansions.
Thanks very much, Arpit. That's really, really insightful. Ken, if I could just turn to you, can you give us a sense of the mix of firms that have come into the DIFC? I mean, from a regulated firm perspective, and what the Indian presence, for example, looks like.
Sure. So they'll give a breakdown just of the geographical representation. So the majority of the firms, the financial institutions that are operating, are from the UAE. It's about 35% of the population. And then next is the UK, the US, and the wider GCC, down about the 5%. Then there are firms from Switzerland, France, China, and another group of countries that all represent a little bit less than 1% of the population. Indian firms in particular represent just over 4% of the population right now. And we do have the large Indian banks are operating. ICICI and Punjab Bank is here. Bank of India, State Bank of India is operating here. A number of those were on the slides that Ali had up earlier. And the other remaining institutions cover a broad range of business models from, banking is the largest. About almost half of the Indian institutions are banks. There is a mix of brokers, advisors, and arrangers, wealth managers. There is a small representation of insurance, and then there are a couple that fall within the DNFBP space that are law firms, accountancies.
Great, thanks, Ken. So yes, we should work together to get India up from 4% to into double figures, I think. But just, I mean, turning to the regulatory aspects of setting up overseas and with a focus on the DIFC. I mean, Moin, can you highlight some of the key aspects that you see as relevant for setting up a financial services business abroad, including any approvals required, within India?
So, while you are allowed as an Indian business to set up a presence in the financial services space abroad, there are a few important aspects that one needs to consider. The Indian regulator looks at financial services as a very sensitive sector and has provided several conditions as well as a prior approval requirement if you're setting up a presence. So for instance, if an Indian investment company or an Indian financial service company wants to have an expansion abroad, yes, they could do that. There are conditions to be complied, which includes they having a good profit track record for over last 3 years, they being regulated in India as well as in the jurisdiction they've chosen. So in this case, it would be the DIFC. If they're choosing this jurisdiction, which regulator would give them an approval? They will need to obtain an approval from the Indian regulator as well. Most of the cases, it's a non-banking financial company, and hence an approval is obtained from the Reserve Bank of India. Once these approvals are obtained, you can have a company set up and a business set up. However, if and when you set up any step-down entity or make any further infusion in the step-down entities, you will need to obtain a separate approval at each such stages. And whether or not the Reserve Bank gives you a waiver on these conditions is really very, very fact-specific because, as I mentioned, they look at it as a sensitive business. One question that we always come across is, suppose I'm a tech company, or if I'm a manufacturing company in India, can I have an investment entity set up abroad? Answer is no. The Reserve Bank does not look at these sort of requests favorably. So you necessarily need to use a regulated entity in India in the financial service space if you want to set up a business in this space abroad.
Very good. Thanks, Moin. Ken, just turning to the DFSA's approach to innovation. I mean, can you describe the authorization options that are available for innovation companies, looking at the DFSA for authorization, and what are the key differences between the options?
Sure. So there are two primary pathways to a license, a financial services license. The first is the conventional authorization model, and the second is the ITL program, which is our innovation testing license sandbox. The key difference between them is the complexity of the regulatory compliance framework that's required at the time of authorization. And what I mean by that is, coming through the conventional process, we will require you to have effectively everything in place before we will give you the final permission to begin operating the business. That means you'd have to have the senior executive officer, and there are several other mandatory authorized individual roles: the compliance officer, the money laundering reporting officer, the finance officer. You'll have to identify a risk officer as well. You'll need your compliance monitoring program in place, your overall compliance framework in place. So there's a whole suite of first, second, third line of defense elements in place. Now, the difference with the sandbox program is that it is at the authorization stage, the basic requirements are slightly lighter. We don't require the entire suite of a regulatory compliance framework. So thinking in terms of first, second, and third line of defense, we focus on the first line of defense for the ITL program at authorization, and you can develop the second and third line as you go through the testing period. So the ITL, the conventional, you have to have everything in place before you operate. Through the ITL program, we allow you to develop that as you test your model and you determine your technology works. Then once you know it works, then you can spend the money and build out the other requirements. And by the time you're at the end of testing, then you'll satisfy the same requirements that you would have had to satisfy in our conventional model. Now, the difference between coming in one route or the other, it's not necessarily a decision of which one you think you like better. There are requirements. Now, anyone can apply for the conventional model at any time, provided that the service you're offering fits within our definition of a financial service. The ITL program is slightly different. At the moment, we're offering one cohort a year. There is one time a year when you can apply to that program, and the basic eligibility requirement is, the first step is that it has to be a financial service. The second is that your offering has to involve an innovative use of technology. So it does need to be a technology-based offering, and it has to be something that we haven't seen here in the DIFC. It may be seen elsewhere around the world, but it's new to the DIFC. You have to be ready to begin your live testing. So it's not an early stage program. The development of the product needs to have been done, and you have to intend to continue to operate in or from the DIFC afterward. So it's not a model where you can test your product and then go to some other jurisdiction. Some sandboxes allow that. Ours is not designed for that. If there's a significant investment we put into you during this, as do you. So we're doing this to make sure that you'll be operating from the center here. Now, in some cases, we may require you to enter the program, depending on the type of business model, how new it is to the center. So payments and money services, for example, at the moment for any startup entity, we're requiring them to go through the ITL program. Established entities don't have to. So there are some cases where we simply require it, and there are others where it will be up to your decision if the technology is innovative enough and you feel you need to test it. And that's a discussion that we can have before you choose the path.
Excellent. Thanks very much, Ken. That's really, really helpful. I mean, just keep staying with you. I mean, you know, what are some of the challenges you've seen, you know, applicants face, you know, through the application process? And you know, what tips can you share to potential applicants that can maybe help mitigate some of those challenges?
Yeah, the first one, and considering this space tends to be more startups, focused on startup entities, be mindful of your audience. I think one of the biggest challenges, and this may seem simple, but startups and some established, you spend a lot of time pitching to investors. And it's important to recognize that the regulator is not an investor. So we can waste a lot of time having a discussion about the need in the marketplace for your product. And the reality is, our concern is understanding what it is you want to do and who you want to do it for, and to. And the quicker we can get to that, the quicker we can have more substantive discussion about getting you authorized. So do consider your audience. Second, make sure you have the resources and make sure you are committed to what it is you're asking to do. Once you file an application with us, there will be a significant amount of engagement. We will be asking a lot of questions. So if you're not certain that you want to operate in this environment versus operating in another environment, you want to sit down and make that decision first, because it will delay the process, and there may be a point where we'll have to focus our attention on those that are ready to test. So as a primary criteria is, are you ready to move forward? And we can tell rather quickly if an entity has thought through the reason they want to be operating in this environment and whether or not their product is ready to go. And make sure, once you've made the decision, do make sure you have the resources to engage with us. What we see often is that companies are applying in multiple jurisdictions, waiting to see which regulator, in a sense, is going to flinch first and give an authorization. And in doing that, you're hurting yourself because each regulator is going to be struggling for your time. So make sure you have the resources to devote to the regulators to which you are applying for a license. So be prepared with people, and be prepared with time to devote to this.
Excellent points. So yeah, I think there's a very helpful tips there from Ken in terms of the application process. Just turning to the business side, Arpit, if I can bring you back in again. I mean, from your business perspective, how can regulators and locations, if you like, support the adoption of digital onboarding, which is, obviously the essence of your business?
Yeah, I think, see, one thing, post-corona and pre-corona world, right? Post-corona world, I think there is enough understanding now that the world can work remotely. There was a lot of gap in terms of mindset earlier, but I think like today also we're doing this conference on web, video, and that's how a lot of things are now happening across the world. So since a lot of human life is now being transacted over videos, I do believe that the perception of digital onboarding has undergone a change among regulators. There is more acceptance. The second comes, so one is the mindset, which I think has evolved a lot. The second is, of course, then how do you do it? What are the risk parameters? How do you take care of those risks? What are the different aspects of digital onboarding which are good to have, which are must have? So developing a framework around digital onboarding is important rather than completely disallowing it. We as a company are very conscious of the risk that KYC and customer onboarding poses, and do not feel that digital onboarding is in any way a more lenient way, but in fact it is a far more compliant way of doing KYC and AML checks. The amount of power a technology or a real-time automated technology allows you, I do not think is possible through human checks, sheer because of the computing power of a computer versus a human, which will take time to even achieve that kind of analysis. So we, in our view, one of the key drivers for growth that we have seen coming from a market like India has been onboarding. It has become the number one factor. Aadhaar has become the number one factor for the growth we have seen. We also now see this in geographies outside. We've been working in Middle East for the last couple of years. We have seen some movement, but we would want the regulators to more proactively work on fully digital onboardings for all products. And yes, create a framework, create a risk-based framework as to what is necessary at the amount of risk to ensure that there is no money laundering, to ensure there is no fraud, but at the same time make digital onboarding tool available to companies like us and so many who would want to launch their businesses outside of Middle East, to ensure that we are able to keep pace with what is happening in the rest of the world.
Yeah, very good points, Arpit. I mean, personally speaking, I think that it's got significant potential to make the whole process much more efficient. You've got an audit trail, and you can get rid of false red flags or whatever. So plenty of potential there. I mean, Ken, I was going to ask you about, I think one of the important elements in terms of setting up or bringing a regulated firm out of India into another jurisdiction like the DIFC is the relationship between the regulators. So do you have any insights to share in terms of how the FSA engages the RBI and SEBI in India? And maybe you want to add a comment on the digital onboarding side as well, if you wish.
Okay, so first, anytime we receive an application from an existing entity in another jurisdiction, we do reach out to that jurisdiction to receive feedback on that entity. So we will contact the RBI or SEBI and get some feedback on that. We have bilateral MOUs with both of those organizations, so we do have open lines of communication with them, and then we also communicate through the GFIN. SEBI is not, but the RBI is a member of the GFIN, and we have regular communication through that. That group meets often, and a lot of discussion is had there. So we do have an open line with both of them. On the digital onboarding component, I'll just comment on the piece about enhancing. It's not about necessarily reducing anyone's work. It's about improving the outcome. And I think that's exactly the right way to put it, because if you're looking at it as a tool to reduce the workload, you're probably not looking at it correctly. It should be looking as an enhancement to what you're already doing and creating a better audit trail, and adding efficiency to what you're doing. And taking that efficiency then frees up that resource that was doing a lot of that tedious work to do some other analysis. So there's plenty of work to do that's not being done. So when you bring in these sort of digital solutions, it should free up to fill in some of the other gaps that are there. Yeah. So yeah, completely support the digitalization of those types of processes.
Yeah, excellent. Okay, and then just turning to our sort of final area around experiences thus far, and also looking forward a little bit as well. Moin, if I can turn to you, I mean, what has been your experience with your clients, who have set up a presence in the UAE, specifically in the financial services space?
Thank you, Ali. I think the recent times I've seen a lot of family offices looking at setting up an investment arm in the UAE. And one of the concerns which you just kindly addressed is what is the relationship and the comfort that the Indian regulators draw with the DFSA, with setting up an entity in the DIFC. I think that really is very helpful because one of the key conditions is the comfort that the Indian regulator and the relevant jurisdiction you're looking at have, and that really brings efficiency. So we've seen and set up family offices in the UAE. The process has been fairly straightforward. The only important aspect is clearly a business plan and how you're going to be regulated in both these jurisdictions, what you're going to really be doing, and also ensuring that your Indian entity is already registered, duly compliant, meeting all the conditions and the relevant ratios and exposure limits that have been set up. So we've seen that in the financial service space clearly. I think it's a very sort of, so there's been an ease in setup in the UAE, and we've not really had any sort of difficulties or challenges in terms of the regulated status, though UAE does not have a single financial regulator unlike the UK and otherwise. Another thing I just want to mention here, and Ali, I'll just add this as an extra point, is that there is a certain amendments have been proposed to what will be treated as financial services. The entire overseas investment regulations are currently under an overhaul, and they are looking at completely amending it. One key aspect in this financial service area is there has always been a discussion on what will be financial services overseas, because the Indian definition is fairly straightforward. It says that if more than 50% of your assets and more than 50% of your revenue is from the financial services, then you are treated as a financial entity, an entity engaged in this business. So what overseas, there are more relaxed norms, and you may or may not be treated as a financial services business. So what they've now proposed to say is that if you were treated as financial business in India, then even your overseas business, suppose your overseas business was set up in India instead as a new business, and if it was treated as financial services, then even the overseas business will be treated as financial services. So that is another clarity amongst other amendments that they're going to bring in.
Excellent. Thank you, Moin. So turning back to you, Ken, I mean, if a company is thinking about applying to the DFSA for a regulatory license, what should it start doing now? What are the key pointers?
I'll keep this one very simple. And the simplest thing someone can do is have a look at our rules. Moin just made a very good point about that. What is in India might not be in Dubai, UAE, DIFC. This is, and I'll go back to where challenges are. We frequently receive applications from applicants who explain to us why they can do a certain thing because they're allowed to do it in their home jurisdiction. It just wastes your time, wastes our time. So look at our rules, and if that is a daunting task, which it can be, the rules are complex, it's a big rule book, then seek assistance. Reach out to either a law firm or a consultancy. Doesn't have to be a legal consultant. It can be, there are compliance consultants that can help with this, but seek help from someone. The cost will pay more dividends back quickly, I think. I think I'll leave it simple, Ellie.
Yeah, no, that's a very clear message, Ken. And Arpit, just turning back to you, I mean, from a business perspective, I mean, certainly you mentioned what you've seen, during COVID, and just want to get your thoughts around, how you see the market, developing, going forward, for digital onboarding, but more generally in terms of the adoption of technology. What are your pointers as to what lies ahead?
Especially for financial services, the way we are seeing, even in, I think, Middle East, I think we've been here for quite a while, but the amount of activity we are seeing now is unprecedented for a company like us. I think most banks who might have been, or large financial institutions who might have been reluctant to adopt automation, not just digital onboarding, but automation in general, I think because of COVID have been pushed to at least look at it, and a lot of them have realized that it's going to unlock a lot of value and profits for them as well, and it's not just no more. So I think pre-COVID it used to be this cool thing that everyone wants to do, but now it's no longer the cool thing, it's the necessity for your business to strive, get more profits. And if you see how the world is moving, and it's going to be same in Middle East also, is that the eventual arbitrage which financial institutions had, which was like interchange, high interchange fees, they've almost become zero in some markets. Like in a market like India, interchange is zero. So once your interchange becomes zero, you need to find ways to automate your core business. Otherwise, you'll become a loss-making business, which is not sustainable. So you will eventually find that banks will realize that that's happening. I'm sure that pressure is also being felt in financial institutions in Middle East. So automation is almost necessary for survival. It's no longer cool, and that automation will lead to a lot of business, not only for companies like us, for any company which is helping a financial institution transform themselves, adopt digital across their entire business verticals. And I think Middle East is ripe. I do feel that it is absolutely the right moment. The other trend that we have seen, and I think Middle East will open up to it, just starting to see it, is this huge collaboration between consumer tech companies and traditional banks. And if you look at the world, Chinese Klarna in US, they have built complete models which have been on a collaborative partnership between a financial institution and a consumer tech company, where a consumer tech company is great at technology, engagement with customer and user experience, and the bank is great at its own financial product. And we haven't seen that in Middle East yet. We do have digital banks, but they're more like subsidiaries of the large banks themselves. I would love to see more bank and consumer tech partnerships. We have large consumer tech companies like Kareem in Dubai as well, and I would love to see the future of collaboration happening, where people are not trying to be walled gardens and trying to protect their territories, but opening it up and interacting and partnering with more and more ecosystem players, which will eventually lead to growth for both of these organizations. So I'd love to see that happen. I think it will, but that would be one of the great things to look forward for in future in Middle East.
Yeah, excellent point, Arpit. And I think our venture building initiatives that will be rolled out through 2022 is very much coming, coming from that perspective, and that will be something to look out for. So listen, I think we've got to the sort of Q&A as part of the session. Just waiting to see what the questions are coming in. I've got a couple up my sleeve, but audience members, please pose your own. This is your chance to have your question addressed by the panel. Let me just sort of ask Ken. I mean, one of the obviously common questions that are asked the regulators is, how long does it take to obtain a regulatory license? Would you like to have a stab at answering that, Ken?
Yeah, and that is a tough question. Let me take my best stab at that. It could be anywhere from 40 days. We have a service standard of 40 days for a representative office, effectively a marketing arm of your institution, to as long as a year plus for a banking institution, and everything in between. And it really comes down to how well, and this, I pointed out earlier some tips, how well prepared you are to engage with us, and how responsive to requests for information. Now, a brokerage model, wealth manager model, typically those could be anywhere from 4 to 6 months, relatively quick. Say a bank is going to be on the long end, of course, and on the easiest end would be your marketing unit, your rep office, and everything in between. So it's a tough one to say. But once it's a discussion when you've decided to apply, based on the business model, we can give you a little better of an idea of where we think the average time is, and what we think would be the things that would hold up the application.
Yeah, and just quickly, you mentioned the ITL cohorts. I mean, when is the next one? When is the next window for applications? So
the next window, the target date right now is May of 2022.
Yeah,
and there may be a little bit of flex in there, and I say only because we are trying to tie that to what will happen in phase 2 of the cryptocurrencies. So.
Okay. Okay, Moin, I've got one for you. I mean, from an Indian perspective, typically, what's the timeline of approval for from RBI? Approval to set up overseas, and how do they respond to such requests?
I'll take a cue from Ken. I think it's very, very difficult to, precisely, mention or predict the timeline. But usually, in our experience, if one is prepared and there are no past non-compliances or issues, it's usually 6 to 8 weeks is the timeline to get an approval. So far as how forthcoming the regulator is, it would really depend on the jurisdiction and your plan. With the UAE, we've not seen any resistance, and around 6 to 8 weeks has worked out to get sort of an approval for being able to proceed with setting up your business abroad.
Excellent, thank you.
Just to add one more thing here is that I'm talking about acquiring existing businesses which are already licensed in the UAE. If you are setting up afresh, then we will need to add in the timeline Ken just mentioned, because you need to be getting in your license, no objection from the regulator overseas, as well as no objection from your Indian regulator where you already regulated. So that would really expand the timeline a bit.
Very good. And just picking up from my side, just something Ken mentioned, we are expecting a consultation paper on the regulatory framework for cryptocurrencies towards the end of the year. So that's going to be a very exciting development going forward. But we continue to look at developing our ecosystem, as I said, and I'm sure that there'll be other developments in 2022 as well. So I think we're sort of coming up to the conclusion of this webinar. I hope that it's provided some useful insights from this excellent panel that we put together. So I would just like to extend my thanks to Moin, Ken, and Arpit for their contribution and their participation. Thank you very much for joining this event, and have a great evening in India. Thanks very much.
Thank you. Thank you so much.
Thank you, everyone. Thank you.
Thank you.
That's
Bye.
Thank you. Bye. Bye.
Bye.